Good morning, Seafried with the morning grain comments. Well, today is USDA report day. Usually the December report really doesn't move the markets that much, but given some of the slow export demand, especially in beans, mostly favorable conditions in South America, this report could have a bearish slant to it, to the bean market. We've seen a really steep drop in wheat prices below the 20-day moving average in Chicago, testing the 20 in Kansas City, but Minneapolis still holding around the 1030, 1035 area. I think wheat's down for two reasons. Number one, they believe that today USDA could raise Australia, Canada, and Argentina wheat crops. That could add to global supply. We also noted in the last Saudi Arabia tender that they actually tendered for new crop wheat rather than old crop. And some people think that that suggests old crop wheat demand might be slowing. We also have some reaction to the Omicron virus overnight that's weighing on stocks and maybe even commodities. UK, Germany is adding restrictions, and some US companies are asking employees to work from home. As far as the numbers are concerned, beans right now down 6 cents at 12.62 in the March. Corn about unchanged at 5.86 in the March, and Chicago wheat down 12 cents at 7.81 in the March. As far as news is concerned, we saw where CONAB estimated the soybean crop at 142.8 versus 142. They estimated bean exports at 90.6 versus 85.8 in 2021. Corn crop is estimated at 117.1 versus 116.7 in the prior report. And Brazil wheat crop 7.8 versus 7.7. So again, there are a few people that believe that once this report is behind us, we could actually see a steady and firm rally in the corn market led by strong domestic demand and basis levels. Also, the market needs corn into the pipeline. As far as the soybean market is concerned, it looks like it's in a trading range with concern about U.S. soybean exports offset by talk that maybe the 2021 U.S. soybean crop will be lower, and that could offset a drop in exports as far as the carryout is concerned. For the wheat, again, the market's watching global production, global stocks, and what they do today, and the impact that could have. There are still some many wheat bulls out there thinking that the higher Russian crops, lower Europe wheat exports, and a pickup in demand globally will be positive to wheat. We also note that current weather conditions across the U.S., western U.S., suggest that a high PDO and La Nina could provide for a dry spring and summer across the southern plains and maybe even the Midwest. 10 days out, there is a map that shows some light shower activity that goes through the U.S. hard red and wheat area. As far as South American is concerned, Europe continues to European model continues to show dry weather in Rio Grande do Sul, southern Brazil, and northeast Argentina. So we'll be back a little bit later with USDA numbers and market impact. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.